Okay, so then there's other stuff like, okay, her home address, right? So not the company address, not her work address, right? This is her home address, 6204 Lincoln Street. The city is listed as Philadelphia, comma, the state, Pennsylvania. You could abbreviate that, Pennsylvania's PA, but I'll just write the whole thing. The zip code, the 5 digits. Again, for us, it's like 92604. For her in Philadelphia, it's 19144. Okay, again, she is not married, so you leave the spouse blank, and leave the spouse social security blank. She does not live in a foreign country, right? So you can skip these boxes as well. Okay, so now we're going to go through the numbered boxes. And again, the government's not going to just trust that you are telling the truth, right? They're going to expect you to include a copy of your W-2 from your employer. Okay, so in box 1 of the W-2, her wages, tips, and other compensation is $83,600. And the smaller boxes over here are for cents. You actually usually end up rounding the cents to the nearest dollar, but I'll just put 0.00. Okay, next, taxable interest. So again, she didn't just get money from working her job, she also got some money from interest on her bank accounts. Okay, so for that one, we look at the 1099 int for interest. Okay, so she gained $956 of interest. We're going to say she did not receive any unemployment compensation, and she does not live in Alaska, so she doesn't get this Alaska Permanent Fund. Okay, so you can just leave that row blank, or if you want, you can draw like a line through it, but yeah, she gets nothing from there. Okay, so now we need to add up all her different sources of income, right? So again, line 1 is her job, line 2 is the interest from her bank account, line 3 she doesn't have any. Okay, so in this case we're just going to add up these two numbers. So yeah, adding up those two numbers, we get $84,556. Okay, so next, box 5, or line 5. No, because none of that applies to her. Yes, a lot of the lines will be left blank if they aren't relevant to the situation. Okay, so we're going to say she's not a dependent, meaning, again, she's not like a teenager whose parents are, taking care of her. She's on her own. So we leave those blank. So no one can claim her as a dependent. So that means that we're going to enter $10,400 because she is not married. Okay. So next instruction, subtract line 5 from line 4. Okay, so that means you take the $84,556. That was her total income, and you subtract what's called the standard deduction. That's the amount that every adult can claim. Okay, so that reduces her taxable income to $74,156. Okay, so that's good, right? Instead of having to pay tax as a percentage of 84,500, she only pays tax on 74,100. Okay. So now we need to know how much money she has already paid in taxes. Again, she doesn't manually do this. It just automatically gets taken out of her paycheck every time. Okay, so looking back over here, we can see that from her job, box 2, federal income tax withheld. So there's already been $15,884 sent to the government on her behalf. Okay, so that's what goes in box 7. Okay, so again, box 2 of the W-2 lists how much money has already been withheld for the federal income tax. Okay, so that number goes here. Okay, I'm just going to draw lines to the ones that don't apply. Okay, 8AB earned income credit. We're not going to get into that situation, so skip it. Same thing with non-taxable combat pay election. There's nothing about that. Okay, so row 9, add lines 7 and 8A. Okay, so in this case, because she had no earned income credit, it's just going to be this number again. Okay, so again, this represents how much money she has already paid to the government. Okay, so now that we know how much she's already paid, we need to figure out how much did she actually owe. Right, it's hard to know exactly how much to pay ahead of time because, it's for a whole year. In May, you don't know how much money you're going to owe 11 months from now. That's why there's this process to balance things out. Okay, so you need to look up the taxable income on a table. Okay, so an example of that is here, like this website. So, you would find the income that applies, and then you would just look up, okay, she is single, so you find the correct column. Okay, so I've already done that for us. She is going to owe $14,283. Okay, and so the healthcare we're going to skip, but basically you're supposed to have healthcare. So if you don't have it, you sort of pay a penalty. So we're just going to assume that she had health year full year round, so she doesn't have to pay a penalty. Okay, so again, the next row you would add lines 10 and 11. But because she had no penalty for not having a lapse in her healthcare coverage, that means that line 12 is the same as line 10. Okay, and reading 13A, if line 9 is larger than line 12, subtract line 12 from line 9. Okay, so line 9, remember, this represents how much she's already paid, right? So she already paid $15,800 something. And line 12, this is how much tax she was supposed to pay, $14,283. So she's actually had more money taken out than she was supposed to. And this is actually very common. Okay, so we now subtract. Okay, so again, you take the amount that she already had taken out of her paychecks, and you subtract line 12, which is the amount she was actually supposed to pay. So she's basically overpaid by $1,601. Okay, so that means that she will get, sorry, I can't show it all at once. She'll get a refund. The government will recognize that she's had too much money taken out, and they'll give her the money back. Okay. And so, after that, in order for the government to know how to pay her, she would have to provide them with like her bank information, right? So like routing number is specific to each bank. So like if two people both bank at Chase, they all have the same routing number, but then account number is different for every person. Okay. So that's all we're gonna do for this one. Okay, so going back to the 4.4 notes. Okay, so what is Elizabeth's taxable income? So that was on line 6, right? Her taxable income was $74,156. Okay, next, what was her tax responsibility? Total tax in line 12, $14,283. Oh, sorry. Okay, again, maybe I'll just remind you where these came from. This came from line 6, and this one came from line 12. Okay, and then does she get a refund? Sorry, that should say or owe the government money. Well, she paid more than she was supposed to, so she gets a refund. Okay, so again, the way we calculated it was we took the 15,884. That was line 7, which represents how much money has already been taken out. And then we subtract line 12 again, which is that amount that she actually owed. Okay, so that means that she'll receive $1,601 back from the government. Okay. So questions on this first example? Yeah. Okay. So let's go ahead and turn to the back of the 4.4 notes. Okay, so again, that form is like the most basic version with the fewest calculations because it's the simplest situation. But if your income is above a certain amount, or if you get income through other ways, you would need to use a different form. Okay, so there was something called the 1040A. So that's less simple than the 1040EZ, but it's not as complicated as the regular 1040. So this is like the in-between version. But you wouldn't do this if you're looking to what's called itemized deductions. Okay, so itemized means you go like item by item. Okay, so for example, if you just imagine like a restaurant receipt, if they just tell you the total amount you owe, that's not itemized. But if they say, oh, like the burger was this many dollars, the drink was that many dollars, the salad was this amount, that's itemized, right? If it lists thing by thing. Yeah, so like if you feel like you have a lot of situations that would give you deductions, right? Like maybe you donated a lot to charity, maybe you, have other situations, like sometimes we used to get like solar energy credits, that sort of thing. In that case, you need to use the full form. Okay, but we're going to look at the 1040A, what it was called. Okay, so this time we're looking at a married couple. The names are Kenya and Robin Omar. Okay, married, one child. So on the back of the pink sheet, so these are both W-2s, right? One for each partner, one for Robin, one for Kenya. Okay, so in addition to what's shown on the W-2s, there's a couple other things that aren't on that paper. They also gained $987 of interest, and they also gained $1,200 in stock dividends. Okay, so this time let's grab the one that says 1040A. Okay, so it doesn't really matter which person we put first. I'm just going to put Kenya first. Okay, and this time they're filling out a joint return. So instead of the two partners separately filing their own taxes, they're filing it together. Okay, so the spouse is Robin Omar. And again, we're just making up all zeros for the social security number. Their address, again, make sure you don't use their work address. You want to use their home address. 14 Rachel Drive in the city of Walnut Creek in the state of Ohio, where the zip code is 44072. Okay, again, skip the foreign country stuff. They're living in the United States. Okay. So this time we gotta fill out the filing status. Okay, so they are married, filing jointly. They are two married people, and they're filing a single tax return. They're not doing it separately. Okay, so again, there were more options over here, but none of those apply to this situation. Okay, so now exemptions. So for this one, well, they have a child, right? So that's going to be an exemption. So we'll put it applies to both Kenya and Robin, right? They both have the same child, so we'll list it for both. Okay, so we need to, list the dependent, in this case, the child. So I'm just going to make up a name. Let's say they have a son named Robert with the same last name, Omar. Okay, again, you would need to list their social security number so that the government can verify that this is who you say they are. Okay, so the person listed, Robert, is their son. Okay, and then we're not going to get into the qualifying child tax credit. That's more complicated than we want to get into right now. Okay, but let's look over here. So now we're going to tally up some numbers. So first, how many boxes did we check in 6A and 6B? Well, because this is a joint return, there's two people involved, right? There's both Kenya and Robin. So we checked 2 boxes there. Okay, and then we have one child listed. So let's just assume that he lives with them. Right, but you could also list it if, that child lives somewhere else. Again, for this situation, we'll just say that Robert lives with those 2 parents. Okay, we're going to assume that they have no other children, no other dependents. Okay, so lastly, this box over here, add up these numbers. So 2 plus 1 plus nothing is 3 total. Okay, So we'll come back to that number in a bit. But moving on to line 7. So here we're looking for the wages, salaries, tips, etc. Okay, so this is where we'll use the W-2s again. So because they are filing as a joint couple, you add their wages together. Okay, so we're going to take Robin's $65,120.97 and add Kenya's $52,126.76. Okay, so combined, their income, we'll just round to the nearest dollar. You're allowed to do that. $117,248. Okay, line 8A, taxable interest. So again, they would know this through a 1099 int, but I didn't want to print out a million forms. So I just told you that their interest is $987. So let's fill that in. Okay, so we're going to assume that all their interest was taxable. We're going to say that there was no tax-exempt interest. Okay, then in line 9, we want to list their dividends. So again, you would find out this information through a 1099 div, div. But again, I didn't want to print out too many forms, so I just listed that they gained $1,200 in stock dividends. Okay, so we're just going to ignore that. Okay, and then we're just going to assume that none of the rest of this applies to them. Okay, so no capital gains distributions. Yeah, capital gain is when like you have something that increases in value. Again, it's more complicated than we want to get into. If they're already retired and they received money from their IRA or pensions and annuities or Social Security, you pay tax on that. But again, we're going to assume that none of that applies to them. We're also going to assume that they are, well, we know they're not unemployed, currently at least, and we're not going to say they live in Alaska, they live in Ohio. Okay, so again, these were all the different ways that people can earn income. For most people, not every line will be filled, right? Not everyone has every situation here. The tax form has to list all the possible ways, but most people, only have a few of them. Okay, but now I'm going to go ahead and add up all of these numbers. Okay, so $117,248 plus $987 plus $1,200. Okay, so their total income for the year, sorry, it's kind of right, $119,435. Okay, so the next section is trying to come up with ways for people to reduce the amount of income they get taxed on. Okay, so I have, this one actually would apply to me, right? Educator expenses. The government understands that a lot of times educators spend their own money on classroom supplies, so they're able to deduct up to a certain amount, but that doesn't apply to these people. IRA deduction, again, an IRA, individual retirement account. We'll talk about that more, but it's money you set aside from retirement. So again, if you set aside money for retirement, you don't get taxed on it right now, but we're going to say they aren't doing that. Student loan interest, again, we're just going to skip that. Tuition and fees, right? Tuition is what you call it when you pay money for college or other schools. Okay, so we're just going to say that none of this applies. Okay, so they have zero adjustments. Okay, so if they did have any of these sort of bonuses, they would get to subtract it to make this number smaller. And that's what you want, right? You want this number to be smaller so that you pay less tax. But in this case, none of these adjustments apply, so the number on line 15 stays the same. Okay. All right, so let's go ahead and turn to the back of the, again, we're not going to fill out every single box here, don't worry. Yeah, but again, this is why most people, hire a tax professional. It can get very complicated. Okay, so here we're just going to copy down the same number from the front page. Oh, sorry, that's a 4. Yeah, again, sorry, this is the same number as on the front page. Make it a little neater. Okay. So, again, we're still trying to find ways for people to reduce their taxable income so that they pay less tax. If they have a very specific situation, if they are blind, they would have a deduction, but that's not going to apply here. So next, enter the standard deduction. Okay, so if we look at the little box over here, so if they are like a dependent, then they do something else, but these people are married filing jointly, right? So we're looking at this number right here. So they get to deduct $12,700 from their taxable income. Okay, so that's the number we're going to write on line 24. Okay, line 25 says subtract line 24 from line 22. Okay, so again, you take the total income they had earlier, and now you subtract the standard deduction that everyone gets. Okay, so now that reduces their taxable income to $106,735. Okay, and then we now look at exemptions. So multiply $4,050 by the amount back on line 6D. Okay, so back on the front, 6D, total number of exemptions claimed, is 3. Right? There were 3 people here, the 2 partners and then their son. Okay, so we're going to multiply $4,050 by 3. Okay, so $12,150. Okay, and now we're going to subtract again. We're going to take the previous number of $106,735, and now we're going to take away the $12,150 that they get as a exemption. Okay, so now their taxable income is down to $94,585. Okay, so just a quick reminder, right? When we first started, we said that their total income was up at 119,000, right? So if you had to pay tax on all 119,000, that'd be a lot. But through these various deductions and exemptions, they're only getting taxed on 94,000. Okay, so that's a lot better for them. Okay, so line 28, tax. So now you would take whatever number you're at, and you would look it up on that website I showed you earlier. Okay, so I already did that. So I'll tell you that for this number, the tax in that year was $15,294. Okay, we're going to say that line 29 does not apply to them. Excessive advance premium tax credit repayment. Yeah, that doesn't apply to them. Okay, so when we add lines 28 and 29, well, since line 29 was blank, that means it just stays the same as line 28. Okay, and here's still more ways that you can reduce your tax owed. Things for like, oh, did you have to pay for a daycare or like a nanny? Are you paying for elderly or disabled? All these other situations might apply. But again, we're just gonna say that none of these apply to the OMARs. Okay, so if there were various credits here, you would add them together. But for them, they get no credits. Okay, so now you subtract their previous tax owed minus any credits. Again, unfortunately for them, they have no tax credits, so this number is going to stay the same. But if they had any of these situations, then this number would go down. Okay, here again they ask about healthcare. So we're going to assume they had healthcare the full year, which means they do not owe any additional money. Again, if you don't have healthcare, the government doesn't like it because it actually adds a lot of costs in the end, right? People who don't take care of their health, they cause more costs in the future, so they want people to have healthcare. Okay, so in this case, no basically penalty for not having healthcare, so this number stays the same. Okay, so now we know how much they actually owed, but let's see how much they've already paid. Okay, so line 40, how much federal income tax has already been withheld. Okay, so let's look back at the W-2s. Because this is a joint filing, you need to combine their numbers. Okay, so Robin at the top has already paid $8,765.90. And then the partner, Kenya, has already paid $6,198.65. Okay, so again, we'll just round that. So together, they've already had a total of $14,965 taken out of their paychecks. Okay, so again, here's various other ways that your amount of tax can be changed, but we're just going to say that none of that applies to them. Okay, so again, if they had stuff here that would increase the amount of tax that they got credit for paying, but in this case, it just stays the same. Okay, so next, if line 46 is more than line 39, subtract. Okay, so line 46 is not more than line 39. Okay, so that means that the amount they've paid is less than the amount they owed. Okay, so they have not overpaid. Okay, so we're going to completely skip this whole section. We're going to skip 47 through 49. Okay, so that brings us down to line 50. How much do you owe? Okay, so that means you instead do 46 minus 39. Okay, so you subtract these two numbers. Okay, so that gives us $329. Okay, so now this is a relatively small amount of money, so they probably aren't going to have a tax penalty. But basically what the government doesn't want to have happen is for you to, hold on to your money the whole year and then pay them all at the end. Because, when they have access to the money earlier, they can use it for other things in the meantime. So, yeah, if your amount that you owe is a lot, you may be charged a penalty because they don't want you to do that, right? They'd rather have you overpay and then they'll give you the money back than you underpay and they have to chase you down to get the money later. Okay, so then in this case, you would need to, send the government money, basically. Okay, so bringing us back to here. Okay, so how many exemptions did they claim? That was back on line 6D. Okay, next, their adjusted gross income. So this is often called AGI. This is an abbreviation you'll hear a lot. Okay, so their adjusted gross income was on line 21. You see it right here, adjusted gross income. Okay, so $119,435. Okay, so determine their tax for the year. Their total tax owed was on line 39. Okay, and then lastly, do they get a refund or do they owe the government money? Again, the total tax that they owe was that number above. The total payments is what it's called in line 46. All right, this is the amount that they've already had taken out. Okay, so they have paid less than they were supposed to. So again, we subtracted and found that the difference is $329. Okay, so the Omars owe the government $329. Okay, so questions on any of that? Yeah. Each of them counts as an exemption because it's a joint return, and then their child counts as a third one. So that's where the 3 is. Okay, so with our shorter period today, that's all we'll have time for. So, check Canvas or the assignment sheet to see the homework. I'm not going to pass out, there's actually no notes next class. We're actually at the end of the unit already, so we're at a review next class. class after.